BlackRock, the secret power behind global finance in the heart of New York City, nestled within the towering glass structure of 50 Hudson Yards, lies the headquarters of one of the most powerful financial entities the world has ever seen, BlackRock. From the outside, it looks like any other corporate building. But behind those walls, decisions are made that shape the future of global economies, influence governments, and silently steer the fate of millions. With nearly $10 trillion in assets under management, BlackRock isn't just a company. It's a force, one so influential that some have dubbed it a shadow government. BlackRock's story begins in 1988, when Larry Fink and 7 colleagues set out to create a new kind of investment firm. Fink had a vision that would set BlackRock apart from its competitors, a focus on risk management. He believed that truly successful investing wasn't just about picking the right stocks, but about deeply understanding and managing risk in a highly complex financial world. This philosophy gave birth to one of the most powerful financial technologies ever created, a system called Aladdin. Aladdin, which stands for Asset, Liability, Debt, and Derivative Investment Network, is not just software. It's the brain of BlackRock. It analyzes millions of data points every second, scanning markets and measuring risk across the entire financial landscape. Today, it monitors more than $20 trillion worth of assets, used not only by BlackRock but also by central banks, insurance companies, pension funds, and other major institutions across the globe. In many ways, Aladdin knows more about the global economy than any single government does. If you are still watching the video, make sure to like the video and subscribe to the channel. And if you don't want to, there's no force. Let's come back to the topic. As BlackRock grew, so did its reach. It began managing retirement savings for average workers, investment portfolios for universities, and sovereign wealth for nations. But what truly set BlackRock apart was its unique investment approach. Instead of trying to beat the market, BlackRock started investing in index funds, funds that track the entire market. This meant that instead of choosing winners and losers, BlackRock would simply own a little bit of everything. This strategy transformed BlackRock into one of the largest shareholders of virtually every major corporation on Earth. Today, BlackRock holds significant stakes in companies like Apple, Microsoft, Amazon, and Google. The scale of its ownership gives it enormous influence over corporate decisions, sometimes even more than the CEOs themselves. And because BlackRock also votes in corporate board elections on behalf of its clients, it has a say in how these companies are run. But this kind of power doesn't come without controversy. Critics argue that when one firm owns large stakes in so many competing companies, it can suppress healthy competition and concentrate power in the hands of a few. For example, if BlackRock holds shares in both Coca-Cola and Pepsi, it may not want either company to outdo the other too much, because that could increase risk or volatility. This type of shared ownership might subtly discourage companies from competing aggressively, raising questions about capitalism itself. In response to such criticism, BlackRock insists that it always acts in the best interests of its clients. The firm claims that its focus is on long-term value, corporate responsibility, and environmental sustainability. Each year, CEO Larry Fink writes an open letter to the heads of major companies, urging them to think beyond short-term profits and to consider the welfare of their employees, the environment, and broader society. He champions a concept called stakeholder capitalism, where businesses serve not just shareholders, but all the people affected by their actions. Despite this public messaging, skeptics remain. They ask, can a company that wields such immense financial power truly be a neutral force for good? Can it really balance the pursuit of profit with social responsibility? Or is stakeholder capitalism just clever branding, a way to deflect attention from the sheer scale of control that BlackRock exerts? What makes BlackRock even more powerful is that much of its work happens quietly, behind the scenes. Unlike elected officials, its executives aren't accountable to the public. Unlike tech giants, it rarely faces public backlash. Yet it plays a pivotal role in shaping climate policy, housing markets, labor markets, and even geopolitical dynamics. Its influence spans continents, and its decisions ripple through the lives of ordinary people, often without them ever knowing. So, who really holds the power in our modern world? Is it politicians who come and go with elections? Is it CEOs of flashy tech startups? Or is it firms like BlackRock, silent giants with access to vast data, global capital, and political connections? The story of BlackRock is still unfolding. But one thing is clear. In the new era of finance, real power doesn't always wear a crown or hold a public office. Sometimes it wears a tailored suit, operates from a quiet office tower, and lets the numbers do the talking.